May profits be upon you. Welcome to another weekly Forex Forecast. We're looking at the pound USD cable. Now, first thing we need to make note of fundamentally, things are in a bad way insofar as geopolitical crisis going on in the Middle East between the U.S., Israel, and Iran. The Ayatollah was killed. There's been some bloodshed on the American side. This is not a great, it's never a great thing to see countries go at war, but we're going to keep this out of the political realm and concentrate on trading. What happens is when missiles start flying, investors globally start to move their assets, their capital out of riskier assets like the stock market and move them into safe havens like the US dollar, the global safe haven like the US dollar, or the um, Swiss franc, gold, silver, precious metals, and bonds. All right. So the investors' knee jerk reaction to missiles flying is to protect their capital. All right, and they're going to go to safe haven. So, what does that mean for the pound USD? That means the USD is likely going to see gains, and the pound is going to get dragged down. All right, now if we look at the monthly time frame, you can see the market has been bearish, making lower lows, lower highs, lower lows, lower highs, lower lows, and this is possibly, potentially, the next lower high for the next lower low. Here's the deal: we see that we are in a descending channel, right? And the market is at that point where it could turn right over, just like it has in the past over here. All right. When once it reached the top, which is the resistance line of the channel, there's a fair expectation that the market's probably going to turn over. All right. Now let's take a closer look at that area, and what do we see? We can see that there was a sweep of liquidity here to make the new high. However, all right, strong however, all right, after making these internal highs, these internal breaks of market structure, as it moved higher highs and higher lows towards this resistance line of the descending channel, it didn't sustain trading above that high. What it did was it swept that high for buy side liquidity and then came back into this range. The next month, we had a bearish close. All right. And this is an inside candle, an inside bar. All right. Meaning that it did not take out the buy side liquidity or the sell side liquidity of the previous monthly candle. What does that mean? It means contraction. It means consolidation. But the contraction means that it is likely to be followed in the next candle, in the next candle formation, by an expansion candle. Now, because we have the market at an area where we can reasonably expect the market to turn over at this um, resistance line of the descending channel here, and because it has already swept buy side liquidity here, and because we haven't broken a high in quite some time, all right, as you can see here, quite a few years we haven't broken a high, we've just been making new lows. You can see that uh, there's a reasonable expectation, along with, coupled with the fact that we have tensions in the Middle East, that the market is probably about to see some downside. Okay. Also, there is a bullish fair value gap here that has unmitigated. Unmitigated. Can you see it here? Let me Let me see if I can get that in a little closer. These blue lines here, this is a bullish fair value gap that the market has not mitigated yet. I'm thinking this is going to be the draw on liquidity. Once market opens here, we're going to see a draw on liquidity to the downside. All right, into this bullish fair value gap. That is my theory. All right, and I think that there's a reasonable expectation there. All right, if we go to the weekly, you can see last week closed in a bullish. I mean, in a indecisive way. All right, it's an inside candle once again on now on the weekly. All right, inside bar. What does that mean? Constriction. All right, contraction. Right. The previous week we had a very strong bearish candle. All right, and uh, uh, sorry, and that was followed by this candle that did not sweep the low of that previous week, nor did it sweep the buy side liquidity either. What are we expecting? Expansion on the next candle. And it's likely it'll expand downward because of the tensions in the Middle East and the flight to safe havens. So I have this low to trade towards. I have another low here. This is an order block here. All right, these down close candles. The down movement is see, and then the bullish impulsive move past that down close. This is an area of this is an order block, a large order block, an area of fair value, if you will, and the market comes back, mitigates, and if there was no um, uh, conflict, I would be expecting the market to pull back up from here. But because there's conflict, I think we're going to take a deeper dive and maybe trade towards the bottom of this order block here and into this monthly area of fair value. Okay, does that make sense? I hope it does. All right, if we go to the daily, what you can see is I left that there. All right, um, if the market opens up here, if the market opens up here, all right, and it moves upward, and that is not likely because of all the conditions fundamentally that I just gave to you. There is a bearish fair value gap here, right above these highs, which would be perfect for a sell model to form to bring price down into this bullish fair value gap on the monthly time frame. All right, that is the bullish scenario, short-term bullishness, and then longer term downside. All right. But I think we're going to see something like this. The market's going to open up into a bullish fair value gap here, and then we'll see a more immediate move to the downside here. And this is where I would TP first at the the bullish fair value gap that I already pointed out. Okay, folks. Now, if you want to write it down, it's at 1.3363 1.3336. All right. And that's where I would TP from if I'm able to get a trade in, get the formation of a sell model here. I would love to take it down here. Yes, I would. Okay. Now, if we go to the 4 hour, and we're going to show you exactly what I'm talking about. If the market opens up here and moves up higher, I think it's only to take this higher because this is a fair value gap that has been mitigated already. Price used it to go lower. I think the highest we'll get is probably that high here to swing down. All right, that's what I'm looking at. Maybe you have a different scenario that you might want to talk about. Hit me up in the comment section if you would. I would love to talk to you about it. You know how I respond to every comment that comes into the comment section. All right. So I am bearish in this market. I don't think there's a bullish scenario. Honestly, I gave you the short term bullish scenario actually. So maybe we take that high and then we come on down. But there's another 4 hour fair value gap here, bearish fair value gap here. I'm not sure if we get past that one. In either way, I'm looking for bearish setups. I will see you in the next video. I want to thank you for watching. I want to remind you that I have some videos that I put out already for the Euro USD, the pound, the US dollar index, and the and gold. I already put those out already, so I want to go check those out and give me your opinions on them. Give me some comments, and I'll see you in the next video. Thank you for watching. May profits be upon you.